When you look at 2018, are risks to the upside?
I think they are. First of all, thank you for having me today, your first day. I'm delighted to be here. Yes, I think, as you said in your introduction, this year has been a remarkable year, stronger than we expected for equity markets. We thought it would be good. But it's been a year where global expectations for activity continue to increase, for the first time really since the financial crisis. But inflation expectations and bond yields have really remained very stable. Overall, you've seen very low volatility in macro variables, which has been extremely helpful. Now, we do expect the global economic cycle to continue through next year, even the year after, making it the longest post-war economic recovery. We do expect the pace of growth to start slowing a bit and for bond yields to edge up. But the combination, I think, is still quite supportive for risky assets.
What's the bigger risk out there? Is there something that could go wrong with monetary policy? I don't know if it's a miscommunication or something that would get equity markets on the back foot.
Well, certainly we do expect investors to start pricing higher rates, particularly in the US. I should emphasize that although the markets are pricing a rate rise this December, they're pricing only a couple of rate rises perhaps next year. We have 9 consecutive rate increases by the Fed through to the end of 2019. So more than the market is pricing. And that may dampen expectations a bit. But it's more important, I think, to emphasize that growth is really what the markets are going to focus on for equity markets. And as long as that rise in interest rates is reflective of a continuing economic cycle, we might get lower returns. That's our expectation, but still positive returns.
Peter, let me bring you over to my chart. Now, this is a very simple chart, just charting the SXXP. And when you look at that, we brought it back to 1987. And then you can see the the second correction, which was 07, 08, the financial crisis. You're quite positive on growth in Europe and therefore European earnings. How much does the euro strength factor in?
Well, very interesting chart, and you can see quite how remarkably strong the recovery has been, even in Europe, since the 08 lows. And that was an environment with very low economic growth in Europe, predominantly, and, of course, very little profit growth. Until this year, European profits have basically been flat for 6 years. The same thing happened in Asia. This is the first year where profits have really started to grow. The US was different. It had pretty decent growth through much of that period. The economy was stronger. It had more of a contribution from technology. But it's likely, we think, that in Europe and in Asia, we get profits now continuing to drive most of the return as we move forwards into next year.